What's up, everybody? This is Eddie coming live from Dallas, Texas. Today we are going to be reviewing a single stock. Next week we'll have another stock. This week's stock is RedFin, ticker symbol R as in Robert, D as in dog, F as in fuck, N as in Nancy. Today to help introduce us to this stock is Sub1.
What's up, everyone? Glad to be here.
I see that you've done quite a bit of research on this company.
It does look like that. I have mastered the Command C, Command V very well in this past couple of days. Yeah.
What sources have you used to help come up with your notes?
I used Yahoo Finance, Y charts, and then I used the Redfin investor relations page and their revenue declarations there, and just their sort of investment presentations that they've done quarterly.
So tell us a little bit about Redfin.
So Redfin is a company in the real estate space. It's it's a redfin.com. It's a website that really aims to. The founding story of the company is that the CEO, the original founder of the company, who is no longer the CEO, was having an experience tons of people have had. I know I've had it. You're about to have it. The experience of buying a house with the typical real estate means, and anyone who's done that immediately jumps to the conclusion that this can be improved. It's expensive. Typically, buying a home costs at least 6% of realtor fees, 3% on each side. It's time consuming. It's very clunky. It feels very outdated. It feels very unmodern. It just feels obviously ripe for disruption, and Redfin is trying to do that. They really emphasize their big pitch, and you see it all over their website, all over their marketing, is that they'll sell your home for a 1.5% listing fee. I've seen that on billboards. It says, sell your home for a 1.5% listing fee, Redfin. That's their whole marketing campaign. They're really hitting the sellers. You also can buy homes with Redfin as your representative, but they market that way less. Right now, the reason for that probably is because as a home buyer, you typically do not pay either of your real estate agent fees, and as a home seller, you typically pay both. So you, as a seller, you typically incur a 6% fee using a normal real estate agent MLS sale. Redfin is trying to undercut that and offer to sell your home for a 1.5% listing fee. But they also have a number of different services, but that's sort of opening to what the company does.
So earlier you said that there was a 6% fee, and it sounded like you said that it goes 3% to the seller of the home and 3% to the buyer.
Well, the real estate agent of the seller and buyer, yeah.
So they're still taking a cut from both the seller and buyer, correct? The real estate agent? Is that what you're saying?
No, I'm saying that I am selling my home, and when I sell my home, I will typically pay my agent 3% and you, the buyer's agent, 3%.
Gotcha.
And Redfin is aiming to undercut that.
And how much is Redfin charging buyers?
So they will, so it's 1% as a buyer, but you still have to. They have like Redfin agents or something like that, and they charge a 1% fee, and then they have something like where it's 1.5% to buy or sell, but if you also sell your home with Redfin, then the buying of the new home fee gets decreased to 1%. However, I don't entirely understand why that is even a business, because like I said, the buyers of homes have every incentive to just do it the old-fashioned way because they don't pay for either agent. So they're really marketing to home sellers as opposed to home buyers, because right now the market is set up to advantage home buyers so that they don't have to pay for anything. So it's a sell-side company, I would say.
And how long has Redfin been trading for?
So, I don't have that memorized.
It's not like an IPO. It's been out for a couple years.
I don't have. Let me check that. Let me pull it up right here. So Redfin has it. Yeah, it is a relatively. It did IPO in July of 2017. Okay, my mistake.
Okay, never mind.
So it's a and
it's been around.
It's been around for a while. July 2017.
And what did it open up at?
So when it IPO'd originally, let me pull that up. It IPO'd at, around $23 a share, something like that.
And currently it's
at $71 a share. So okay. It's it's basically a 3-bagger in 3 years.
Nice.
Yeah.
All right. What else Can you tell me about the company?
Okay, so they're really their main market is home sellers. Right now, their recent data release indicates that they had one of their highlights was that they're reaching 1% of the total housing market. Okay, that might sound like not much, and it is not much, which I guess speaks to the possibility within Redfin. But right now, Redfin interacts with 1% of total home sales. So that's kind of like an argument for their runway. They have tons of potential to grow. As you can see, that like right now they're only doing 1%. They could easily, it's not hard to imagine that companies like Redfin and Zillow and online home selling marketplaces will continue to have an increased role in home sales because the typical way of doing it with a real estate agent is clunky and expensive. And it just seems obvious that someone is going to figure out how to modernize the home buying process. And, of course, the CEO of Redfin said in, April or May of the pandemic, he said that the last 2 months of the pandemic have done more to modernize the real estate transaction system than the previous 20 years. So it really got a jump start from the pandemic because, people weren't interested in visiting homes. And one of Redfin's things is all of their homes have a virtual tour option. You can click on their listings and, walk through the house in a video. So that was perfect for the pandemic. So that really sort of, brought it into the forefront more. It also has a service where they have concierge service. So let's say you want to sell your house, but it needs a lot of updating, and you think that you would lose money if you sold it right now in comparison to the fee in comparison to like paying $10,000 to update your kitchen and getting then $20,000 or $30,000 more on the sale price. So Redfin has a service called Concierge where they'll sell your home for a 2.5% listing fee, and they will organize all of the contractors to come into your house. You'll pay the contractors, but they'll come in and they'll say, you should update your kitchen, you should update your bathroom. We'll set up the contractors, you pay the bill, and they'll arrange all that, and then you pay a 2.5% fee, ideally with the point of increasing your home sale. They also have a product called Redfin Now, meaning if you want to sell your home right now and don't want to put it on the market and just want a cash offer, Redfin will buy your home for a 7% fee. And that's not terrible in comparison to what is the typical process, costs 6%. If you want to sell your home right now because you have an emergency, for example, if you had a death in the family or a divorce or you had a sudden job change or your home is just not selling for whatever reason, you can sell your home using Redfin Now. They'll make you a cash offer, typically lower than you get on the market. That's how the business works, and they'll charge you 7%. But in the event that you need to sell your homes quickly, they have an option for that. So they're just sort of typical brokerage service where they'll list and sell your home on the normal MLS marketplace for 1.5%. They'll fix up your home for 2.5%, or they'll just buy it cash for 7%. And so they have three different sort of deal funnels working within their business. And they're also hoping eventually to be like an end-to-end consumer and actually get into the title company business, making loans. Right now they're not doing that. And that's sort of a growth opportunity that they have, that they could address the entire real estate process, being the title company, selling the mortgage, buying homes cash and making a profit, and all these different little niche markets that are within the real estate market.
And what can you tell me about the CEO?
So the CEO is Glenn Kelman. He was previously at Plumtree Software. His online presence indicates that he's an entrepreneurial software guy. Like I said, his sort of most famous quote in the last month was that real estate commerce has probably virtualized itself more in the past 2 months than it had in the prior 20 years, in reference to what the pandemic did to Redfin. So it definitely got a boost, like many sort of virtual, work from home stocks. Redfin benefited from that as well.
And how do their financials look?
Well, it's one of those things there. I like the idea of it. Having personally been involved in the real estate world, I bought 2 homes, one to live in, the other as a flip. I've experienced the process of buying and selling real estate, and it is clunky, and it is absolutely ripe for disruption and can be improved and undercut. And, eventually a lot of people predict that this real estate agent model of buying and selling homes is going to go away. And that's just one of those mega trends that I believe will continue to exist. That being said, Redfin, despite all these tailwinds and despite their virtual tours and a number of promising businesses, is not really demonstrating that in revenue growth. In fact, they had decreased revenue year over year. They were down 0.74%. Their price to sales ratio is pretty healthy, 7.9%, 8 price to sales. You see a lot of these tech companies that are recently IPO'd, that are hot names, they'll have a price to sale ratio at like 20, 30, 40, sometimes even 50. I mean, Snowflake price to sale ratio is like 200 or something like that. It's dramatically high. So they're trading at basically 8 times sales right now. That's not an extremely high multiple for some companies, but I don't like that their revenue is not growing, I have to say. So I have sort of mixed feelings about that. I believe that Redfin has obvious tailwinds. I believe that Redfin, will continue to command an increasing market share, but I would have liked to see that with revenue growth, and I'm not exactly sure why that's happening. But they're a profitable company. They have a profit margin of 14.4%, but not growing as much as I would like, despite apparently being revolutionized in the pandemic.
Would you consider this company more than a 2 or 3 bagger then?
Like from right now?
Yeah.
On what kind of timeline? 10 years?
Within the next 5 years.
Within the next 5 years, I predict this will at least double in the next 5 years, but highly volatile. I would need to see better performance, better execution. I sort of get the impression that it has a lot of potential. It's easy to talk about the idea of why Redfin could be successful. It's easy to criticize the current system of real estate agents, but I still just haven't seen it sort of materialize in growth. And what could be more important you're not buying Redfin because you think it's fairly valued. I mean, it's a growth stock. It's not paying a dividend. It's a $7 billion company. It's one of those classic sort of growth ideas, but it isn't growing its revenue right now. So I like the idea. I'd like to see better execution. I'll be watching it.
Are any of their peers doing better?
So, I had one of those pulled up. So, Zillow, a lot of people compare them to Zillow, and so that's a kind of reasonable comparison. I don't know. Zillow does buy homes cash in the same way that Redfin now does, but they don't do this listing agent fee. One that I had personal experience with is called eXp Realty, and that's a company that is sort of like a cloud-based real estate agent. So you're an eXp real estate agent, but they don't have those like typical Keller Williams brick and mortar stores. And in looking up comparisons, eXp Real Estate is crushing it. They are dramatically growing their revenue, in comparison to all of the other companies in its sector. So actually, I was happy I did this because I kind of got exposed to eXp Realty, which has just been crushing it. So I would say that Redfin is just not executing as well as I'd like. I think it's a good idea. I hope that real estate buying and selling gets revolutionized. I'd like to look a little bit more into eXp Realty, but I'd like to just sort of follow Redfin for the next little while.
So is it a buy, a hold?
It's a watch. Pass? It's a watch. It's a pass. I don't own any. I just want to keep watching it. I believe in the idea of revolutionizing real estate transactions, but just hasn't delivered yet.
At what price would you make it a buy?
I mean, I don't know.
$60,
I don't
$50?
know. I don't think I would buy it.
Wow.
I don't know, because its price to sales is already reasonable. The problem I see is the revenue growth. Let me see if I can show you. Revenue decreased 1% year over year during the third quarter. I'm not interested in buying companies that are priced at a premium, that are growth stocks, when their revenue is decreasing 1% year over year in apparently the most revolutionary time in the company's history. That to me is just, I need to see growing companies if I'm going to buy it, growing revenue if I'm going to buy it. So I'm going to pass, but going to watch it. Wouldn't surprise me if it doubles in the next year or two, because it is a good idea. And
don't buy, but don't be surprised if it doubles.
Yeah, someone's going to dominate. Someone's going to win. Someone's going to increase its market share. Right now, as I said, Like, where is that? It's less than 1%. It's like it just achieved 1% penetration within the real estate market, which is, yeah. So it commanded only a market share of 0.93% of measured by the consolidated values of homes sold. That might sound small, but it was also up from 0.81% in 2018, and more than double. So we're still talking about a very small snippet of the real estate market. Someone's going to grow that. That seems obvious to me. Look like to just keep following it.
All right. I don't have any more questions in regards to this stock. Do you have any more comments about them?
No, just, glad to do it. And I look forward to what are you doing next week?
So next week, we're going to review Asana. Love that company.
Okay. I've never actually looked into Asana, so I look forward to that.
All right.
All right. We'll see you next week.
See you guys.
So a great fundamental dive there. Definitely a good long-term stock play, in my opinion. It's a disruptive technology. I do think you guys are onto something here. This is a very good find, but again, we might be in some murky waters in these coming days with the whole GameStop experience, and markets are going crazy right now. But again, not the point of this video, but at least from a weekly moving average standpoint, this is sitting comfortably above the 21, and it looks like it's trying to form a pattern here, maybe an ascending wedge, triangle, however you want to quantify it here. I'm not really a pattern trader, but again, sitting comfortably above that 21, and I do think this does have some upside to go. However, I do want to point out, because this is a NASDAQ-based stock, things closed pretty well aggressively down on the last week, and really the daily isn't doing us any favors here when this eventually does load. Daily does look like it wants to point down. It is peaking below the 21 exponential daily moving average here, and looks like it wants to take another test down here. Stochastics probably not going to like this one. Ooh, yeah, that's pointing downwards. This is on triple Qs again. So general sentiment, I think we may test some downside here. Let's take a look at the volume. Yeah, the volume is real. So again, RedFin is probably going to follow what triple Qs does, which is the NASDAQ here. And even if we go back to a weekly, I mean, Stokes are pointing down, volume starting to pick up a little bit. So just be careful in the short term, but long term, I think Redfin is going to be just fine. Again, Redfin should be playing with the narrative of triple Qs here. Hopefully it loads. There we go. And now it is closing below the 21 exponential. So it looks like we have some pain going into this next week. Stochastics are pointing down. Again, I think this is a very good long-term chart. But right now, I think we're in a little bit of short-term pain with all the shenanigans going on with GameStop and whatnot. One thing I see here is, well, we're above the 21 monthly. That's quite obvious. There is quite a bit of selling pressure. So maybe a correction is due here, but I mean, there's a pretty nice trend upwards here. So again, long-term, this is a great investment. I think it has a lot of potential for disruption. Keep a close eye on it. If you have shares in it, I would consider holding. I wouldn't necessarily want to dump them unless you're a trader, but again, long term, I think this has a lot of potential.